How will Singapore's changing population affect the demand for housing? So population growth plays a critical role in any real estate market. More people means more demand for housing, since everyone needs a roof over their heads. But recently, on December 5th of 2024, Elon Musk tweeted that Singapore, and many other countries are going extinct. So he was referencing our country's low total fertility rate of 0.97, which is far below the replacement rate of 2.1. Yet, Singapore's population number tells a different story. When we look at population growth, our total population hit approximately 6.04 million last year, and the resident population, which includes Singaporeans as well as PRs, was about 4.18 million. This is largely due to the country's ability to attract global talent. So who are these new residents and how will housing demand be affected? Before we dive in, this video will focus on Singapore's resident population, as they have the biggest influence on property sale and purchase, unlike non-locals who have been affected mainly by the additional buyer's stamp duty regime. However, I'll also touch on how non-residents affect the rental market later on in this video, so stay tuned. When we break down the resident population by the age group, two trends stand out. The first is that the largest increase is from people who are above 65 years old. The second trend is that there have been also significant growth among people between 30 and 39 years old. So let's look at the first group of people, our seniors. What are some ways that an aging population could affect housing demand? As our society ages, housing demand could shift in a couple of ways. First, there might be fewer resale listings. Why? Seniors are likely to age in place, preferring the familiarities of their current neighborhoods over the hassle of relocating, especially since newer homes tend to have a smaller square footage. Secondly, an increase in estate sales. As the elderly population passes on, we might see an increase in estate sales. This should create short-term price fluctuations, depending on how their estates approach selling their properties. Next, what about the increase in population for those aged 30 to 39 years old? So this demographic represents young professionals and families advancing in their careers. They are aspirational buyers with the capacity to take longer loan tenures. Looking at the top 20% of earners, these people can comfortably afford a property of $2 million, which is sufficient today to purchase a resale 3-bedroom condo in the OCR region. This increase in demand is likely to benefit private housing. Now let's take a look at how the non-residential population could affect the rental market. When we look at the non-residential population, the largest increase has been from work permit holders. This group has grown significantly. However, some of the CMP work permit holders might be staying in alternative accommodations such as purpose-built and factory-converted dormitories, which should reduce some pressure on the rental market. Now, if we ignore migrant domestic workers, since they will likely be staying with their employers, the next group that has the largest increase would be the student population. So this increase will likely boost rentals near popular academic institutions. Now the last group that I want to point out is the S-Pass and Employment Pass holders. Compared to 2020, you can see that there has been very minimal growth in these two groups of people. So S-Pass, for example, has recorded a roughly 11,000 decline since 2020, while E-Pass holders have only increased by 7,000 people. As a result, since this group of people likely hold higher wages, what this could impact would be higher end rentals, especially in the core central region market. So population growth is a key driver of housing demand in any real estate market. What's equally important, however, is also to understand the demographics behind this growth. An aging population might reduce the number of resale properties and increase the number of estate sales, while a growth in young families as well as career-driven professionals could increase the demand for private housing. On the rental side, demand for the lower end of the market is likely to remain strong. However, the new Special Economic Zone with Johor and the Johor Bahru Singapore Rapid Transit System, the RTS, could ease some of this rental demand when it's ready, while prime properties may continue to face challenges due to the lack of growth in the S-Pass as well as E-Pass holders. Thank you for watching. If you found this video insightful, don't forget to like and subscribe, and I'll see you in the next video.